start. Less than a week to go before the Finance Minister announces the Union Budget for the year. And it's important for us to know what to expect, because the budget changes how much money we take home at the end of the month, how much we save, and what we invest. It's important for us to prepare our household budgets and our investment portfolios for what we might hear from the Finance Minister next week. Now, to help us understand what those expectations are and what the realities might be, we have a few gentlemen join me in the studio. Pranav Saita is our partner at EY, who's going to help us understand what's going on with the taxation, both direct and indirect. Kaustav Roy is with Cushman & Wakefield, who will help us understand if that home is going to become any cheaper for us, if any of us are going to be able to afford a home over the next 1 year. And of course, Vishal Kapoor handles wealth management at Standard Chartered. He'll help us understand how we should manage our portfolios. Joining me from our Delhi office, Dhirendra Kumar, our in-house mutual fund expert, who will also give us advice on how we should react to the budget. Pranav, obviously I'm going to start with you. Now, you and I have had a lot of discussions on this show about when we can expect the direct tax code to come in and what changes it will bring. It's obviously not going to come in this year. It's going to take another year. But do you expect the Finance Minister to possibly take us closer to the DTC, that initial tax slab which is currently at 1.8 lakhs? Do you think that might go up to 2 lakhs?
Right. So the direct tax code, as you very rightly said, is unlikely to come before April 13. And rightly so, the standing committee has just about submitted its report to the Parliament. So one would have to go through it, bring home the representations, the recommendations of the standing committee. Yes, I do feel that the personal income tax slab would go up from 1,80,000, and rightly so it should. We should move closer to what the DTC is likely to bring to us. So I would not be surprised at all, and I would really hope that the threshold goes up from 180 to maybe upwards of 2 lakhs. On whether the highest tax slab of 30% gets elevated, that I'm not so sure. Given all the fiscal conditions that we see right now, I'm not too sure whether he'll have the liberty and the freedom to be able to increase that threshold.
Vishal, we know that the fiscal deficit is possibly going to be a very bad announcement. People are talking about 6% of the GDP at this point. Now, we also know the Finance Minister has to do something to control the fisc. Do you think it's going to be indirect taxes?
I think, growth is definitely a big area of concern. And I think, yes, it could be indirect taxes. But I think the other area that we've got to, really look at is the expenditure side. And what can we do to control subsidies? And how do we make sure that that expenditure is really going towards, infrastructure building or all the growth sectors rather than just, subsidy? So clearly, I think fiscal is a major area of focus and concern. Indirect taxes, yes, like we discussed, if the DTC is not coming through and you have some sort of, I think leniency on the personal taxation side, then that's not going to help. GST is one area that, we should look at.
But then again, given what we saw happen in UP and all of the other state elections, it's possible that GST might take longer than
yeah, so that does look more difficult. And therefore, you've got to look at things like excise and customs, which is, what can you do over there? They do have a multiplier effect. So those could be the other areas that you tamper around with.
But I want to come back to you very quickly. When we talk about indirect taxes, a lot of times investors think it doesn't affect them. But it does, because it eats out of our household budget. Everything becomes more expensive. There's some talk right now about the general excise duty coming up in this budget. What are the expectations in that area?
So if the stimulus is rolled back during the 2008-9 financial crisis, they had reduced the rates. So if they roll it back, they'll bring up the excise duties by 2% and the service tax by 2%. That certainly will have an impact on prices of commodities, prices of manufactured goods, and therefore, to that extent, will have an inflationary impact. That, coupled with the crude prices and the fuel subsidy, if it has to be brought under control, certainly will bring back inflation. At least that's the fear.
Dhirendra, there's also a request right now to the Finance Minister that our deduction under ETC, which is currently capped at 1 lakh rupees, be increased to 3 lakh rupees, because in a country like India, we should have more tax incentive for making those investments. Do you see the possibility of that happening, or if it does happen, do you see it going up to 3 lakh rupees?
I have very little expectation from this budget. DTC was, has been much talked about. It's unlikely to happen. The only thing which I think is able to strike a chord, which are very, which is important for one segment of the population, at least the tax-paying population, which is talk about DTC and actually including some of the provisions for the senior citizens, because senior citizens get completely excluded from the DTC investment options that are listed so far in the draft. So that's one. The other thing is I'm not very hopeful of anything meaningful coming out of the changing slabs or changing provisions of ATC, even enlargement to some extent.
Dhirendra, they're not really expecting too much from the budget this year. Kaustav, the other thing that has come up as a deduction or an increase in tax saving is while we pay our home loans, the interest deductible on that is up to 1.5 lakh rupees. There's a request to increase that to 3 lakh rupees, which is interesting. If you do some simple math on it, if I buy a home for 15 lakh rupees at 10%, that exhausts my entire deduction for the year. What can we buy for 15 lakh rupees in one of India's cities, really?
Yeah, at least not in the major cities, if you're looking at. I mean, when you're looking at major cities, I'm talking about tier 1, even tier 2. You're not getting much for 15. But I think that possibility of that increasing to maybe 1.8 lakhs or so, or maybe up to 2 lakhs, not more than that. Because I think he will also have to continue the interest subvention for the priority sector, which is right now for 15 lakhs, and chances are that they might get just pushed up to 20 or 25 lakhs. And of course the worry is on the infrastructure side. Now if there is fiscal deficits are running the way they are, I think the spending on infrastructure will reduce, I would say. The push will definitely come down.
Vishal, there's also a request here that STT be cut at this point. Now, from the point of view of someone who tracks the markets on a regular basis, do you think that even though it's a small move, that move would possibly be required to give the markets the trigger that it's been looking for?
I think, I don't know if it will be a trigger, but it will definitely be in the positive direction. So I think clearly STT is, tends to be a large chunk of a transaction cost, especially for long-term investors if you're a delivery-based sort of, equity investor. And we've seen a larger volume move to F&O, which, fundamentally is not long-term sort of equity investment. So yeah, reduction in STT I think will be a good move to sort of get some long-term, delivery-based players back into the market.